Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we'll take a look at the euro currency, right, at the eve of the Fed results. So actually right now euro currency doesn't show any clear pattern or something signal for trading. Here we're mostly interested with the signs that market is forming, trying to catch the idea. So what the real market would like to tell us. So, what we should expect in the nearest future. So from the one point of view, today comments from different analysts, there's some very contradictory information. So from the one point of view, most analysts expect the dovish comments from the Fed on the concerning the rate hiking and so on, and many analysts start to think that maybe the rate hike will happen only once in this year. At the same time, other analysis point that recently this was really a significant increase in the yield of the United States Treasuries. So this is the United States bonds, and usually on the short-term bonds rate, usually the yield usually rising if market expects the rate hike or at least some hawkish policy announcement. So some hawkish comments from the Fed. Current behavior, guys, on the market mostly points on the first scenarios, that the comments should be dovish, at least on the forex market. Euro currency right now behaves so that it absolutely doesn't mean that this indeed will happen. So, but the market right now just shows the expectation of traders, of participants of the markets, of the investors. So, and based on this action, most investors expect, by looking at this chart, that comments from the Fed probably should be dovish rather than hawkish. Why? So, if you take a look at this progression to the upside, and especially with this ABCD pattern, take a look at the market behavior. What we have, as ABCD has been created, market has completed the 100% extension, AB equals CD target. Then it has shown really very deep retracement. So at 618 support was last final chance for the market to keep this ABCD valid and continue move high. So this was in fact the break-even point between the failure and the survival of this ABCD pattern. But market was able to hold here and take a look, turn to the upward action and exceeded the 100% extension. Unfortunately, or fortunately anyway, market wasn't able to continue move directly to the 1618 target that stands at 116 approximately. It has tried to do this, but here looks like some significant barrier, and we already have discussed this barrier by taking a look at the weekly chart. So I could show you again on the weekly chart. This really, I just erase these indicators. You will see it very clear. So you can see on the weekly chart this long-term barrier stands. It's 1460 area approximately. So you can see market has tested many times here, again, 3 times, and finally here. That has become the barrier again. So market, in fact, needs some triggering event, something that could push market, push price for this level. But this issue, this event should be really important, because to break this significant area, market really needs something special, something outstanding. And one of these possible issues definitely could be the Fed decision, especially if it will not be in agreement with the overall expectation on the market. So that's why, as you can see, market returned back up, wasn't able to break this area. But what is right now, we're coming to the very, very important moment. What is really important for us? take a look at the reaction, so that it's not the simple failure. Usually, when the market fails to continue move higher, it's just reverse down and break the overall trend, break the tendency. But this is not the case. So market wasn't able to continue move to this target and turn to some retracement, some pullback. But take a look how small this pullback. In fact, market is calling around its previous top. It doesn't show any significant drop. Retracement was really very small. Market in reality it just has stopped right at the monthly pivot point. It stands above the monthly pivot. It stands above the yearly pivot, and market stands above the just minor nearest fib support 1218 area. So this is not even the daily confidence at around 110.50, as we initially discussed. We said this probably market could take some bounce to this area, but this hasn't happened. Market in fact has stopped right at this level, the first fib support, minor fib support. So as you can see, mostly it stands since March around the completed ABCD target, and doesn't show any significant drop. It means that this reminds some kind of the preparation for further breakout. It looks like the market is building an energy, consolidating before breakout will follow. Maybe Fed will become the catalyst of this thrust. Who knows? But this is definitely the bullish price action. Although we do not have any patterns here, we do not have some clear signs and signals that tells us that yes, market will continue to move higher. Not have any some continuation patterns, something of that sort. But the fact that market stands around the former top, around the former completion target, this retracement already has happened, and you can see market is not turning to another retracement that will be absolutely irrational in current situation, because retracement should happen after market will complete the important target, as it happens here. Market has completed important target, retracement. Here, market hasn't completed any targets. That's why the flat standing here is absolutely logical. No significant retracement has happened. And this mostly points on the bullish sentiment on the market, the expectation of something big, and maybe this will be really a breakout. So on the 4-hour time frame chart, guys, we have some minor signs of the bullish behavior. So first of all, take a look at this divergence. You can see this hidden bullish divergence that has appeared right at this level. On the 4-hour time frame chart, this is the confidence support, 1220, 1218 area. So you can see this minor retracement. Pullback down was very choppy, as you can see, very small action. So this is definitely not the some breakout or something of that sort. This is not definitely not the significant reversal, something of that action. So the same kind of we see here. So right now, as market has hit this reaction, so shown minor bounce. Also interesting, guys, that market here has completed not even AB equals CD pattern. It has completed just minor 618 target of this A, B, C top, minor 618, and creates the agreement. So I will show you. So also important that market wasn't able even to show some deeper action, because it really has the chance to do this. Below we have 110.50 daily confidence support, and this was not some strategy if market even would move to this area, but this was not the case. Market has stopped at the first confidence support. Here you can see the 618 target. Anyway, now market returned right back up above this trend line, above the weekly pivot point, and has tested already weekly pivot resistance 1. So upper breakout here could become the first sign that points on the further upward continuation, as market is ready to take another challenge, another attempt to continue move higher right to the next destination point. Next destination point here we have to around 116 even. This will be monthly pivot resistance 1, and final ultimate extension of this our major ABCD pattern on the daily chart. Another picture of the 4-hour time frame chart gives us another pattern that we could monitor, and this is some sort of the channel. You could call it as the flag pattern. This could be very useful to understanding of the situation in the short-term perspective. So in fact, as you can see, market right now stands in the sloped range, and upward breakout here above this range will coincide with the breakout above the weekly pivot resistance one probably, or even will become a bit later. And this breakout also could become the sign that market is ready to make another attempt to show the upward continuation. But in general, guys, even without taking a look at these patterns and on the 4-hour time frame chart, the fact of standing here, calling around the former top, this is always bullish sign. So that's why this points on the market's sentiment, on the market expectation that currently markets, at least on the euro currency, mostly expect the dovish comments from the Fed. And what will happen in reality, so we will see a bit later.